First up, AI ethics in education. In 2026, artificial intelligence is reshaping classrooms around the world, but it brings serious ethical questions. UNESCO's recommendation on the ethics of artificial intelligence, adopted by 194 member states, sets out principles for responsible AI use. The key concerns for students are privacy, fairness, and transparency. When you use generative AI tools like ChatGPT, your data may be collected and stored. Schools must ensure compliance with regulations like COPPA in the US and GDPR in Europe. A major report this year warned that AI poses risks to children's cognitive development and emotional well-being if used without proper guardrails. But there is also enormous potential. AI can personalize learning, provide instant feedback, and help teachers reduce administrative workload. The key is balance. Students should understand how AI works, question its outputs critically, and never blindly trust automated results. AI literacy is now as important as digital literacy was a decade ago. Next, building your credit score in 2026. Your credit score is a 3-digit number that determines whether you can get a loan, a mortgage, or even rent a flat. Experts recommend 5 key steps for students this year. First, establish credit early. A student credit card or a credit builder loan can help you start building history. Second, always pay on time. Payment history accounts for 35% of your credit score, the single largest factor. Third, keep your credit utilization below 30%. That means if your credit limit is £1,000, try not to use more than £300 at any given time. Fourth, avoid applying for too many credit accounts at once, as each application triggers a hard search that temporarily lowers your score. And fifth, check your credit report regularly for errors. You can access your report for free from Experian, Equifax, and TransUnion. Building good credit takes time, but starting in your student years gives you a massive head start. Finally, the 50-30-20 budgeting rule. This is one of the simplest and most effective budgeting frameworks for students. The idea is to divide your after-tax income into 3 categories. 50% goes to needs, rent, groceries, transport, and essential bills. 30% goes to wants, entertainment, dining out, subscriptions, and shopping. And 20% goes to savings and debt repayment. For students with irregular income from part-time work, you can adapt this rule. Track your monthly income, calculate 50% for essentials, and make sure you are putting something, even a small amount, into savings each month. The power of compound interest means that saving just £50 a month at a 7% annual return from age 20 could grow to over £260,000 by retirement. Budgeting is not about restricting yourself. It is about making intentional choices with your money. That is your EduSmart for today. Subscribe for daily content, and we will see you tomorrow.